I'm so excited to jump into this with you guys. We have been talking about how months of inventory are really important as a leading indicator of home prices in the short run. And we have openly talked about how months of inventory were insanely low for many years now, and that they had to go up. It's actually a healthy thing for all of us as real estate investors for months of inventory to go up. And if this is your first time hearing about months of inventory, what we're tracking is the amount of inventory on the market divided by the number of sales that happened in the previous month. And it helps us see what our months of inventory are. That's how many months would it take to exhaust the current inventory on the market given the same rate of sales. And historically, between 6 to 7 is equilibrium. Lower than 6, you would expect higher than normal home price appreciation in the short run. And higher than 7, you would expect lower than normal home price appreciation in the short run. That does not mean price declines. It does not mean once you get to 7, prices just go down. It's just one indicator that is very important to keep note of. So for friends of the show who have been paying attention here, guys, we just crossed 6 months of inventory. What does that mean? This is uncharted territory for us in the Not Your Average Investor show.
It is the highest it's been since we've been doing the show.
Guys, it is okay. It is okay for buy and hold investors. And I'm going to dive more into that here, but I want to just see the numbers. I take year over year, 2019, and then I did 2024 and 2025. Why did I do 2019? It's because that was the last normal market prior to the COVID effect. And that's what we tie ourselves back to in order to make good sound judgments here. But in March of 2019, everybody thought this was an awesome market to invest in. And we had 4.3 months of inventory.
Yep.
Many people didn't know this.
Yep.
We had about 8,000 homes on the market. Nobody was saying, hey, we were way high on inventory, or that months of inventory was way high and months of inventory had increased to astronomical levels. Nobody was saying that. And that's, again, a reason why we predicted that we would be normalizing as we got into 2024 and 2025. Well, as we get to March of 2024, we see for sale inventory is at about 9,000 homes. We had more sales, but we were right at that 4.3 months of inventory. But we were creeping up. And I was telling you guys, it's going to get to 6. It is okay. It is okay. Well, now we're here. We're at 6 months of inventory. Inventory has increased. We have over 11,000 homes on the market. And sales have actually gone down a little bit year over year. So now we need to look a little bit more into that. Is this okay? Or is this a sign of some troubling times coming along? I've already spilled the beans with you guys that it's okay. So I'm going to tell you why it's okay.
Got it.
But the common thought out there and what you're hearing and the noise in the system all says that this has to be inventory related. It's that inventory is skyrocketing. And these are two really respected sources that, quite frankly, are missing the point a little bit here.
Tell us the point. Tell us the point.
Because I broke it down and I wanted to understand just how much inventory has risen. And if you look from August of 2023 to August of 2024, inventory in Jacksonville surged 62%. We were at about 11,000 homes on the market in August of 2024. Fast forward now to March of 2025, we're at 11,374. Our inventory level has only grown 4% since August of 2024. So the big spike of months of inventory going from 4.3 to 6.1 is not due to inventory surges or inventory spikes in the Jacksonville market over the last 8 months. And that's a really important point. So if it's not for sale inventory, if it's not inventory in general, and you know that months of inventory is going up, that means it has to be sales, right? The number of sales is what we need to focus on.
Another way to say it is it's not supply.
Yeah, exactly. It's not that you've just had a glut of homes that are just filling the market in Jacksonville. It's not inventory related over the last 8 months.
Got it. Got
Right?
it. It's just sales has dipped. So now let's look at sales.
Right. Now, another way of saying it, if inventory surged 62% in the last 8 months, then I would be drawing a different conclusion.
100%.
Right?
Yeah.
And unfortunately, a lot of the headlines out there just don't have access to this information or don't know how to read it. So those inventory related articles are a little bit outdated.
Okay.
So it is sales, but it's not that simple. We need to dive a little bit deeper here. So again, showing how we got from August 2023 to August 2024 to March 2025, and you saw months of inventory go from 2.7 all to 6.1. Well, the biggest driver here is sales. And if we look in August of 2024, we had about 2,500 sales in Jacksonville, and we have about 1,850 here in March. So that's a pretty big change. What happened there? Is this a sign that people no longer want to be buying homes in Jacksonville, or is it something different?
Yeah. I mean, I wouldn't guess it's people not wanting to buy homes in Jacksonville based on the economic activity in this
So
in the
then
city.
I wanted, exactly, right? And now I wanted just to like take a step back and think like the idea of buying a home in Jacksonville, how does that look compared to other places in the state of Florida? Or how did that look compared to other places in the country? And so I pulled some of the economic indicators that would lead to people wanting to buy a home and choosing a market to buy a home in. You can see the 5-year population growth rate. In Jacksonville, our population has grown 12% in the last 5 years. That's the third highest rank in the state of Florida, and that's the 5th highest in the entire country. So clearly people are moving here and they need a house to live in, and many people choose to buy a home. So people love moving to Jacksonville.
Not surprising. There's been top 10 most people moving to lists for the last 15 years that I remember to Jacksonville, right?
Exactly.
Okay.
Exactly. 5th highest in the entire country.
This second one's a little bit more surprising to me.
Right? Median household income. People are earning great wages here in Jacksonville. Our median household income is $82,700. That is the second highest median income in the state of Florida. Higher than Orlando, higher than Tampa, right? We're only behind Miami. So the fact that we have people moving here and you can earn a great living here is pretty incredible. Going down to the next one, like how much does it cost to live? Well, our cost of living is 0.8% below the US. That is the best cost of living in the state of Florida. And then unemployment here. When people move here, people are, of course, employed. Our unemployment rate is 3%. That's the number 2 lowest unemployment rate in the state of Florida, number 12 lowest in the entire country.
These are all numbers that I have felt by living here, right? I talk a lot about how my wife was making X in Miami, and now we've been here for 5 years and she's making 2.5X what she was making in a W-2 job. My cost of living dropped by like 40% the moment that I moved here. I've kind of been like snickering at all my friends in Miami about how I've been able to grow a real estate portfolio while everybody feels like they're getting choked out in living expenses. I think these numbers in a vacuum are one thing, but this data of talking about purchasing power that you put together, I think is really, really powerful.
So like the value of choosing Jacksonville and to buy a home in Jacksonville is really strong, and people rush to value. People make decisions based on value. So then I did some data here and I said, okay, if we looked at the overall purchasing power in the state of Florida and we took the median income and divided it by what does it cost to live in different cities in Florida, Jacksonville's number 1, right? Jacksonville's overall purchasing power is better than Orlando, Pensacola, Tampa, Daytona Beach, Lakeland, Port St. Lucie, Miami. Right? So if you're thinking about moving here, your purchasing power is going to go a lot farther here than in other places. And then I started to think, okay, well, purchasing power is one thing, but like, how about buying a home? Because now I'm trying to relate it back to like, why are home sales lower? Did people just all of a sudden just decide that this isn't a great place to live, to move, or to buy a home in? And of course, that's not the case. So then I looked at what is our home purchasing power in the US for growth markets. These are markets that have grown at a rate that is higher than the national average over the last 40-something years. And these are, by the way, these are the only markets that hit that. It's a relatively small number of markets out there. But for all of the growth markets, places that you want to put your money where it has grown more than in other places, Jacksonville is number 3 in the entire country for home purchasing power. You can get more of a home here in Jacksonville. You're the third most of a home out of anywhere in the country if you want to be in a place where values are growing.
Again, not surprised, but to me, the thing that I'm seeing in these 2 charts is this idea of why so many people have moved here from out of state. And now what we're really feeling is why so many people from in-state are moving here and buying homes and stuff like that.
So we know a lot of people are moving here. We know why they're moving here. What's happening? Do people just decide not to buy homes? Like what outside force is happening to us that resulted in the number of sales going down? Well, here's what it is, guys. Low interest rates pull forward future home sales. High interest rates push back current home sales. So when we were doing the show in 2020 and 2021 and interest rates were so low, we talked about how we were pulling forward demand. Can you kind of share what that means?
Yeah, pulling forward demand is essentially saying, hey, I am setting myself up for success. If I have this life plan and I know that in the next 5 years I'm going to make this decision, and economic conditions have like made it particularly favorable to make the decision now, I'm going to do whatever I can to make it happen. That's the reason why I cashed out an old IRA in order to buy my third property. It's, it's the reason for many people saying, okay, maybe I'm going to buy this home that I might not be able to afford right now, but today it's really, really affordable based on my monthly payment as well.
Exactly.
Yeah.
The biggest impetus to you thinking that in our conversations was, interest rates were like 3.5%, 4%.
Correct.
So that's the effect. If you really want to augment buying demand for houses, lower interest rates are the single greatest lever you can pull. Well, conversely, when you have higher interest rates and they stay here a lot longer than they ever have, again, going back to that data, 42 years ago when they rose as much as they did, they went down right after that. Now, when it's happened, they have stayed high and have even gone up in the months that follow. When that happens, guys, at some point, it suppresses housing demand. Some point, it's suppressing it a lot.
Yep.
And we're starting to see that happen now. Right? There's only so long it can go on where people are dealing with high interest rates.
True.
And so you're starting to see that, and that's resulted in lower home sales in the short run. Right? And guys, listen, this is still new. Okay, like it's not like home sales have fallen off a cliff, and it's not like this has happened. I'm looking at the last 8 months here. What I'm trying to help you see is that if interest rates continue to stay this level and they don't go down, I would expect this to continue to happen, the suppression of home sales going forward. So I put some data to it as well. And I said, okay, what does suppression of home sales really mean? Well, to me, and this is how people generally do it, you want to look at mortgage application, right? If people are, if interest rates are so high, you would expect that mortgage applications would be down a lot. Conversely, back in the day, mortgage applications were through the roof when interest rates were so low. So put that in a chart here. And what you find right now, mortgage applications are down 70% from their peak, which was actually March of 2022. Mortgage applications today are actually down 32% from what the normal mortgage application rate would be. Now it's from 2015 to 2024. What you would actually expect is that mortgage applications would be higher than what the norm would be from 2015 to 2024 because we have more people living here now. Our population is now 1.8 million people. So you would actually expect it to be a lot higher. But we're down 32% right now. And when mortgage applications are down, home buying, home demand is down, and that ultimately results in lower home sales on a monthly basis.
Explain this chart real quick. So this line here is the amount of mortgage applications. This other line here is the mortgage rate.
Yes.
So you're seeing this like juxtaposition between kind of like how the amount of applications lags a little bit based on the way that this thing goes up, and then it completely separates.
Yeah, I just think it reflects a couple of different things. It reflects that the longer that interest rates go on, the effect of suppressing demand for mortgage applications and for home buying, the effect gets augmented, right? So what I mean by that is if you look at interest rates going up and up and up and then staying up, you're seeing the mortgage applications line go way down. I mean, it has fallen sharply, right? So I think that is one takeaway. Here's the other takeaway. It's interesting because the peak was in March of 2022. When were interest rates low? Were the interest rates low in 2020 and 2021?
Yeah.
That's when
it was really low.
Why do you think that it peaked? Mortgage applications peaked in March of 2022.
I think there's just a lag. I think people are slow to move on understanding an opportunity because they don't have the perspective.
That's 100%. People are late to the game. People are listening to outside sources. They don't talk to experts who have been here. If you
Yep.
were a part of the show in 2020 and 2021, we talked about the deal is
Debt.
the deal is
Yeah.
the debt, right? The deal is the debt. And we helped clients really build massive real estate portfolios. They pulled forward demand. They added properties in 2020 and 2021 and when interest rates were low.
Yep.
And our population, our community here was not late to the game. But that's a beautiful thing about our community. We're not average. We'll say that.
Yep.
Average is late to the game.
Got it. So I guess this is the conclusion then. So once it comes back up, people will start piling back in.
Yeah. Here's the thing, guys. This is expected. If interest rates are going to be this high and stay this long for this homes, right, at the same rate, but we are all buy and hold investors. And what this is doing is it is suppressing housing demand. When you are in a market that has such value to offer people to move here, and you are the 5th highest population growth in the entire country, people are moving here. They're saying, this is where I want to be. People want to buy homes.
Yep.
People are going to make that decision to buy homes. And the greatest lever is going to be interest rates. And so when interest rates come down or people just get comfortable with what interest rates are as the new normal, you're going to see home sales go up sharply. And the way to think about this is just adding additional home price appreciation in the future. That's the way that we think about it here at JWB.